Hello. Hey guys. Okay, who do we have here? Let's wait for people to start streaming in. Can you type where are you from? Hello, Raymond. Can you type where are you from? Where are you from? Hey, okay, so we're waiting for people to stream in, right? In the meantime, hello, Cal. Hi. Hi, Conco. Hello, Keith. Hey, in the meantime, while we're waiting for people to stream in, could you help by sharing this video so that more people can join us? Hello, Keith. Hello from Singapore. Hello, Nikesh. Type where are you from, okay? But before that, help me by sharing this video so that more people can join us because honestly, I have something very exciting to share with you. And the tech industry has really just been super overheated, right? And everyone is like FOMO, especially now. It seems like in the near term, or at least for now, the markets have gone up after the 3 weeks of correction. And it seems as though, right, the S&P 500 is only consisting of the tech. It's like this golden boy, this poster boy or poster girl, like everyone just going for tech. But today we are going to talk about something different. Okay, I mean there's some tech involved, but really it is this stock that I'm going to talk about is not in the tech industry. It's not the traditional tech that or the typical tech that we're talking about. Hello, Santhi. Okay, so before I begin, can you help by sharing this video and liking this video? Click the like button. All right, so that we can push it up, and more people can watch it. Help by clicking the like button and help by sharing, and then we can go. Hello, Calvin. Hello from Penang, right? Okay, so while you share, let me just run my ticker. They just want me to share it, okay? Let me just help me by sharing it. Okay, so just give me 30 seconds, 30 seconds, and then we will go, okay? So like and share this, and then we will go. Let me just key in something. Okay, so let's go. Hey, can you guys just type in what is the brokerage account that you are using? What is the brokerage account, guys, that you are using? Mammoth merger. Yeah, how come my name is gone? Okay, very weird. Okay. So yeah. Okay, so I hear hello Jasmine. You say hello from Hong Kong. Okay. Hi. Okay, so I hear I see you guys. Sexo, TD, IB, TD, TD. Wow, a lot of TD. Hello, John. John is using IB. Wow, so many TOS. Most of you guys are using. Hey, hello, Ben. Most of you are using TD Ameritrade, right? Can you tell me what happened with TD Ameritrade? What's the latest news? Shane says TD and Sexo. Okay, what is the latest news? What is the latest news? Hey, Sindra, why you put angry face? Sindra. Oh no, it sticks. Hello, Benedict. What is the latest news with TD? So many of you are using TD. Do you see? Can you just read the thread? Most of you are using TD Ameritrade. What is the latest news with TD Ameritrade? Yes, that's right. Santi, you are correct. Merge with Schwab, correct? So we are going to look at this opportunity today. Honestly, when I look at the financials, I was a bit like surprised. I was like, oh my goodness, wow. Okay, so let's go. Okay, let me share my screen. Schwab. Now I just want to show you something. Okay. Indeed, we are talking about Schwab. Now, see, it says over here, Charles Schwab has finally has once again sent shockwaves through the financial services industry, announcing not its intent this one is old news. Last time it's intent, but then now it has already been finalized. Okay, the news has been finalized to acquire TD Ameritrade, valued at approximately 26 billion. You will see the two biggest publicly traded discount brokers combined into a giant entity with over $5 trillion in client assets. It's crazy. And then this Wells Fargo analyst says it's a Goliath in wealth management. So what exactly is the history? What exactly is the makings of all this discount brokerage? Oh, sorry, I'm actually not sharing my screen. Hold on. Where is my StreamYard? Okay, let me share my screen. Okay, finally, now you can see. Sorry. Data seems that most people's account have yet to be opened. Yeah, because they're waiting. I know. Okay, very good. Come, let's see, right? What has happened, right? What is in the making of this mammoth merger? Look at this. For Charles Schwab, right? Do you know that the company, and also together with Ameritrade, these companies were founded in 1970, okay, the early 1970s. And this is where the Securities and Exchange Commissions first approved the discount brokerage, and this marked the birth of the discount brokerage industry. And when you look at the history, very, very interesting. So Charles Schwab was opened in 1971. And then 1978, right, it has 45,000 client accounts. In 2 years' time, it quadrupled to 147,000. And then in another 2 years' time, it tripled to 375. Okay, and then later Charles Schwab, they sold it to Bank of America, and then later they bought it back. But through it all, right, you look at all these acquisitions, it's insane. Acquisition. Look at all of this, all these blue boxes, they're all acquisitions. Okay, all these are acquisitions. Even the past few years, they've made so many acquisitions. This is for Charles Schwab. And then for Ameritrade, okay, Ameritrade wasn't TD Ameritrade initially. All right, in 1980, they bought over TD. So then TD Ameritrade was formed in 1984. And then they started competing, in the whole discount brokerage industry. And 1997, they had 45,000 accounts, which is what Schwab achieved in 1978. So they're kind of like 2 decades behind. But then you see in just 2 years, right, it actually 11 times the account. And then as usual, all the acquisitions. And then boom, what happened? It's like the colliding or the merging of two giants, okay? It's insane. Let's have a look, So just at a glance, right, Charles Schwab, they have 12 million brokerage accounts, okay? And then TD Ameritrade have 12 million brokerage accounts. Actually, now it's more because this one was in 2019 when they reported it. Now combined together, they have 25 million brokerage accounts, That is like 5 times the size of Singapore. Okay, and on top of that, the client assets, right? The assets under management, they combine together, it's about 5 trillion. And later I will show you guys what this means. Okay, 5 trillion. And it's just, you see, so now because of this merger, as in prior to this merger, they were already giants. And now with this merger, they are even larger giants. So part of their model, right, is that they serve registered investment advisors. Now, what are registered investment advisors? Very simply put, they are people who manage the assets of high net worth individuals, okay, and institutional investors. So they sit on the buy side. They sit on the buy side. They manage your funds for you, okay, of the high net worth individuals and of institutional investors. So they register with the SEC, and they operate. Okay, so they operate within an institution, as in they are licensed people, okay, who help others with their investments. So can you see, right, in all the landscape, Charles Schwab and Ameritrade, they are now a big giant, okay, serving 14,500. Not only that, okay, not only that, now together with this merger, right, they are handling more than $5 trillion of funds under them, of assets under them, which accounts for 10%, okay, 10% of client assets in the retail financial services market. But within the market of smaller high net worth. So high net worth, you have high net worth, right? And then you have ultra high net worth, right? So within the high net worth sector, they are actually having 70% market share, which initially called into question. I mean, the authorities, they were looking into this case because they were saying that, is it an antitrust case? Is this going to be an antitrust case? And then later, Charles Schwab, they refuted, and they said, no, this is not antitrust. We may be 70% of the high net worth market, less than 50 million net worth people. So that pie, they have 70% of that market share. But in the total market share, they have 10%, which actually, honestly, it's still very large. It is very big. Okay? All right. So let me just screen. Okay. Hold on. And I can tell you, right, if you stay to the end of the presentation, you won't regret it, because this is really, to me, I see opportunity in this company. Okay? So, please improve the image. What do you mean, please improve the image? Oi, Belinda. Oh, image is extremely blurred, really? How come, huh? I think it's your Wi-Fi. Yeah, okay, Belinda, I think it's your Wi-Fi. Anyway, okay, so this is after the merger. Now it has become really, really huge. And something about Schwab, okay, something about Charles Schwab is that it has an incredible management, and they have actually disrupted their own business model. Can you guys tell me, right, in a typical discount broker, what is the stream of revenue? Can you type it in the chat for me? What is the regular stream of revenue? What is the typical stream of revenue that you can think of, when we talk about discount brokerage? You guys, right? You use TD Ameritrade. So last time, if you guys have been using TD Ameritrade, IB, Sexo, what is their revenue stream? Can y'all type it in? Yes, right? Now I see it. Y'all say brokerage and commission. But now what has happened? There is a disruption in the business model. It is a race to zero. Can you see? Initially, they charged, $70 per trade, $30 per trade, $13 per trade. Now it's $0. Okay, and this elimination of fees is the culmination of its founder's vision of making investing accessible to all. And do you know that just last year, because they have zero commissions, right? The client openings was 140,000, in the first month of 2019, once they announced that there was zero commissions. And look at this. Okay, do you all think that this has significantly impacted Charles Schwab or not? Do you guys think that this has significantly impacted Charles Schwab? Type yes or type no. Has this significantly impacted the business? Type yes or type no. This raised to the zero. Eat win liao. Who is this? Ben. Ben says eat win liao. Wyman says yes. Okay, anyone else? Can you tell me this raised to zero, right? Has it severely impacted Charles Schwab? Talk to me, guys. You gotta respond to me, okay? Respond. Okay. So I see a mix of yes and no. It is fine, all right? It is okay as long as you participate. So great for everyone who's participating, because that's how you learn and absorb the information. Gerald says super jialat. Okay, let me tell you something. Look at this. Ta-da-da-da. Can you see? Just look at this, percentage of total revenue. This tells us the commissions revenue out of the total revenue. Do you know that for Charles Schwab, it is only 3.5% of their revenue? They are so clever. They disrupted their own business model. They shifted and diversified their revenue streams, right? And they already kind of knew that this was coming, and so they diversified their revenue streams such that commissions revenue only made up 2.5% of their revenue, and therefore they were minimally impacted. So clever. Do you know that as compared to Ameritrade and then compared to this one, the ETFC, which is another competitor, can you see that commissions actually make up more than 10% of their competitors' revenue? And because, right, they had no choice but to follow suit with Charles Schwab, who is one of the market leaders, right? Competition is so large. Yeah, Benedict says, wow, I also think it's so wow, right? Do you know that because the competitors have no choice, now you see the brokerage firms, they are all 0, 0, 0. And because the competitors don't have the diversified revenue streams, do you know that they are so severely impacted that they have no, their ability to invest in client service and technology investments, right, for the future has really been affected. Okay, and that is why TD Ameritrade had to be bought over by Charles Schwab, which is great. And I'm going to talk about it. Let's look at this. Look, management who is competent and forward-looking. Remember, we say when you buy into companies, right? Management is one of it. It's very, very important. You see, the CFO says it has seemed inevitable that commissions would head towards zero. So why wait? We have a business model that doesn't depend on commission revenues, a long-term orientation, and a history of being willing to disrupt ourselves. So important, based on client needs and competitive dynamics. You see, we believe in enhancing our value proposition and competitive positioning, encouraging the consolidation of client assets and trades. All right. So they have a very forward-looking management. And so this is their business model. Okay, let me show you. They started here. They started with, where's my mouse? Okay, so look at this. This is how they have disrupted their own business model. Last time, they started with trading commissions only, right? They were a discount brokerage. Yeah, Santi, be patient, Santi. I'm talking about it now. Don't know what their brokers and okay, now you're finding out. Okay, now, so stick closely with me. So it has remade itself into more than a discount brokerage firm, right? In fact, do you know it has now turned into an online bank? It's one of US largest banks, right, by deposits, okay, which is now its main generator of revenue and profits. So what happened was in 2003, okay, in 2003, they started allowing clients to temporarily they can't say so fierce. Okay. Not fierce. I'm like, be patient. Okay. So Schwab actually from 2003, okay, so that was 17 years ago, they allowed the brokerage clients to temporarily park their cash before investing. So they park it in their platform. They park it in a bank, like a Schwab bank, okay, before investing in stocks and bonds. I'm sure that you guys have floating cash in your account, right? So that is what they did, okay? And then this MAMMOTH. And then right now, do you know that they have $300 billion in cash? You know, like this floating cash amongst all the accounts that are traded. So what do you do with this? Obviously, you use it as loans, lend out, right? You go and do other investment vehicles and you earn interest from them. And that is how they have transformed into an online bank, okay? And this is driving a huge part of their revenue. Now, so they shifted, right, their monetization strategy from commissions, okay, to what we call the opportunity cost of cash balances via net interest margins. I'm going to talk about that in the next slide. All right. And what they do, right? So now instead of a transactional relationship with people, okay, instead of a transactional, like, oh yeah, I just get your money whenever you do a trade, they are building deeper relationships with their clients, deeper relationship with their customers. How? By inducing them to move beyond opening trading accounts and using trading accounts into mortgages, into mortgages, into home refinancing, into asset lines. So they're journeying with the client. Do you see that? When I want to buy a house, then I also go to Schwab. When I want to, I don't know, do other investments, buy a car, and I need loans and if I need to do mortgages, I go to Schwab. Okay. And something that's very interesting is that Schwab, they actually don't do business loans. They don't seek customers beyond their brokerage account holders. And what does this mean for them? It's very, very important. This means that the people in which they loan the money to, correct? They are people that they have a lot of information to, because they can see your trades. They know what is your net worth. They at least from an investment point of view. And because of that, right, they give out loans to people who have good credit ratings, and their default rates are very low. Okay, and and then what else do they do, right? So then they move up, to proprietary funds. They move up to advisory services and robo-advisory. They move up, to banking, to being like a bank. So this is how they transformed their service. Okay, they also service independent registered investment advisors, which is what I told you guys, right? About 15,000 of them after the merger. So they service these advisors, and in wealth management, they also move beyond like affluent mass market clients. Now they're moving towards the high net worth and ultra high net worth investors. So they're so smart, right? That someone from Stanford University, one of the lecturers, he said what started as a firm to trade stocks became a full service financial institution that changed the way Americans save and invest. It's a complete like overhaul of their business model, which is so clever. The CEO is just so clever. Okay, so they actually moved up the value chain, what we call vertical expansion, moving up from trading commissions to all these higher tier different revenue streams, and a horizontal expansion, which is increasing leverage. Okay, meaning that you are riding on larger spends. All right, larger spends. And then slowly, this one, the trading commissions used to be 100% of their revenue stream. Now it's only 3.5%, correct? It's just a minimal 3.5%. So now they're focusing on better value to customers. And because of that, they are able to scale. And because they scale with efficiency, Santi says super smart, correct? Jakin, Benedict Go, thank you for answering. RIA means Registered Investment Advisor, exactly. All right, so the advisors that are helping high net worth and ultra high net worth clients do their investments. That's what a RIA does. All right. Okay, so Schwab now they took away the trading commissions. They went into different platforms, different products, customer segments, and then they extended upwards, they extended sideways, right? And now they're able to give that value to customers at a large scale, and then they're able to invest in technology, in service capabilities. Okay, and then when they lower prices, they're also improving the value for the customers. So at the end of the day, they have really earned the customers' trust and the business of the customers, right? Their customers' trust. And this has enabled them to leverage the growing scale to disrupt all their lower value services. All right, all this at the bottom over here, all the lower value services. And they're able to climb up the value of higher value, the chain of higher value services, and then they broaden their platform. Okay, so they build the base first, and then they go up the chain. So clever. Okay, now guys, at this point, okay, I see there are 270 plus of you here. Can y'all help once again by liking and sharing this video, because I really want this video to get out to people. I want to let people know that there are actually opportunities out of tech. All right, and you can see this CEO so clever. There are gems in the market that are out of tech. All right, okay, so this is their revenue streams right now. Okay, on the banking side, they earn from net interest. From the asset management side, they earn through the asset management fees. And then the broker and dealer, that's the trading revenue, which is a super small part. All right. So looking at their revenue, looking at the revenue, okay, look at this, So if this is the amount, right? This is the absolute amount. You can see that right now, most of their revenue is coming from net interest revenue, okay? Followed by the asset management and administration fees. And then lastly, you see such a minimal portion, right? Only 3%. Okay, it comes from trading revenue. Now, what is each of these revenue streams? Net interest revenue, very easy, right? It's from your margin loans, it's from your bank loans, your investment securities, so on and so forth. Okay, this is in a nutshell. And then asset management and administration fees, you earn it from proprietary market mutual funds, from proprietary ETFs, for example, and also fee-based advisory solutions, right? Because you advise them, you advise this RIAs, you advise the advisors, right? And then the third one is trading revenue, which is when they execute the trade for the clients, then they take some commissions for it. All right, so Stonehaven all in, Chotomate. Okay, so at this point, if you guys understand what I'm saying, can you type you for understand? Type you in the chat so I know you're following me. If you guys understand me so far, type you in the chat. Type you in the chat so I know. After you have typed you, when I go on to the next part of the presentation, which you will be like, wow, okay? Okay, so I see the U's. Hey, hi, Brendan. Hello. Hello, Kathleen. Hello, San. Okay, so now I'm going to move to the next part, looking at some numbers. It's really quite impressive, guys. Help me to share this video, okay? I don't want to nag at you guys, but help me to share this video so this content can go out to more people. Also, smash the like button, smash the like button, smash the heart button. Okay, just to respond. Yeah. Okay, just respond. All right. Okay. So look at this. Look at this. Charles Schwab 1.4. So this was in 2009. Okay, 2009. This was the client assets that they were managing, right? The asset under management, because now they are like a bank, right? They're also managing assets, and they have different assets. They used to be like fourth in line. Only 1.4 trillion under assets. But do you know that in one decade, ta-da, it more than doubled. It's like 2.5 times, okay, to 3.8 trillion, and it has beat all its competitors in the face. Oh my gosh, look at this. And that's because they really very nimbly shifted their business model, which is what I shared with you guys just now. All right? John Ma says you for Unity. Yes. Okay. And the Unity was his IPO, actually, the IPO thing. Okay, but anyway. And you see, right, in the industry, okay, there's this indicator called the expenses on client assets, which just tells you, whether you use your expense efficiently to serve and to service the assets under management, right? Meaning these people that you are servicing, what is the expense that you have servicing your clients? Do you know that Charles Schwab has the lowest in the industry, meaning that they're the most efficient, and then followed by TD Ameritrade? It is like amazing. Okay, it is amazing. And why are they able to do that? It's economies of scale. You see, right? This is the asset under management, right? This is the asset under management, and it's really economies of scale. All right. Okay. Now, okay, this slide is a little bit heavy, so stick with me. Okay, stick with me. Okay, so if you look at this, what do you guys see over here? So commission rates has declined, right? Whew, declined. And then you see what it has impacted. ROCA is basically the revenue on client assets. So meaning that taking their client assets, right? How much revenue are they generating based on the client assets, right? It has plummeted, right? It has plummeted, like, wow. It's plummeted by like 80%. But look at this. Look at this. Hey, hello, tuning in from YouTube. Welcome. We are talking about Schwab. Cool investment opportunity, okay? So, you see, although their revenue on their client assets have declined, what has happened is that because their total assets have increased and because they changed their revenue model, remember just now I was telling you going up higher in the value chain, look at their profit margins. It has just escalated over time. Okay, it has just increased. And you know, as investors, earnings per share is very important, right? You want to know how much profits is the company generating for you per one unit stock that you are owning with them. So look at this, it has risen. Okay, it has risen. It's just insane. It is like 7 times in the past 2 decades, 7 times in the past 2 decades and 4 times in the past decade. It is just insane. from 10 cents per share in 2019, 17 cents, and then now it's 70 cents. And you see, this is what the CEO says, right? Okay, this one very long. Yeah, he says although our ROCA, which is the revenue per client per dollar of client asset, has declined by 80%, they have tremendously grown in their net income and earnings per share because we continue to make a variety of investments that benefit our clients. We do so through our services, products, capabilities, sometimes the price. What he's trying to say is there is diversification of revenue and they are constantly being very nimble. Okay, nimble and moving with times, and they are diversifying. This is also an important principle in investing, right? We always say that you don't put your eggs in one basket, but you diversify. Okay, so look at this. Not everything is well and rosy. Okay, maybe let's do this. Can you guys tell me what do you think has happened in their last quarter's results? Do you think, I mean, they have very good, revenue diversification and all that. But can you tell me do you think that in the last quarter, did revenues and profits increase or decline? If you think it increased, type I. If you think it dropped or declined, type D. If you think it increased, type I. If you think it dropped, type D. How come I cannot see the... Guys. Talk to me. If you think it increased, type I. If you think it declined their revenues last quarter, type D. Tin says I. Stonehaven says I. Wyman says dropped. Okay, very good. Very good. Let me tell you what is the answer. I see a mix. There's like 50% increase, 50% decrease. Now, wow. Okay, I really see a mixed response. Before I tell you guys, I'm going to say this again. If you haven't already shared this video, share this video. D, cause you say not so rosy, Liao. Okay, I'm just going to pause here. Let's go. Okay, you are right for those people who put D for decline. Okay, not all is well and rosy. So look at this, right? Actually, last quarter, year on year, they declined. They declined in their net revenues, in their net income. Okay, it declined, and that is why there is an opportunity for us now, because we know it's a solid business. But what happened is that COVID obviously impacted it. Why? Because it's a bank, right? A lot of its revenue come from what? Guys, can you talk to me just now? Remember, I showed you which is its largest revenue driver. What is its largest revenue driver? Type it in the chat. Type it in the chat for me. Type it in the chat for me. What is the largest stream of revenue for them? What is the largest stream? Okay, there is a lag. Yeah, the largest revenue stream, exactly, is net interest income, correct? Net interest income. What is the current interest rate now? Guys, what? Yeah, okay, what is the current interest rate now? Correct. What is the current interest rate now? Guys, what is the current interest rate now? Yeah, correct. But do you think it can forever stay at zero or not? Do you think so? That the interest can forever stay at zero? Do you think it can stay like that? Obviously not. Okay, obviously not. Hello, Nayoka. Nayoya. Hello. Okay, it cannot stay like that forever. So obviously it is going to rise. Now, very interestingly, it has already recovered a little bit. Actually, not even a little bit. Look at this, huh? This was just reported a few weeks ago. Okay, I tell you, the management is really amazing. They do a monthly activity report. Which company does that? I don't know any company that. I mean, not many companies actually do a monthly activity report. Okay, look at this. They highlighted for the month of August included. Do you know what? Core net asset. Okay, so basically, what they're saying is that their new assets increased. Okay, their client assets were up 20% year on year, which is great. Okay, and then the client cash as percentage of assets also increased. Okay, so this is very good news. Now look at this. Okay, so we just want to focus on this last column, which is year on year. Correct. So you see, total client assets increased 21%. Receive ongoing advisory services increased by 17%. Active brokerage account increased by 18%. New brokerage accounts increased by 60%. Can you see that actually? Yeah, can you see that actually there are already some rosy signs. Okay, there are already some rosy signs. Oops. Okay, now I am going to go to the financials of the company. Okay, I'm going to go to the financials of the company. And then if they can, what's this? TSM does it too. If they do monthly reports, maybe think of sim account openings can quicken too. Okay, I know some of you are waiting for it to open. Okay, so now I'm just gonna open Morningstar for us. Okay, I'm just gonna bring us through the financials of the company, and while I wait for the page to load, once again, guys, if you guys haven't shared, no, if you guys have shared this video already, can you type shared? If you have shared this video, can you type shared? And for those who have not yet shared or have not yet liked the video, please help by liking and sharing. If you are learning something today, like and share the video and so others can learn as well. Okay, let me just load. So you guys can do that, okay, while I load my Morningstar. Okay, done? But Brandon, they also have assets. They also have asset management and okay, which is like 30% now. Of course, I mean, yeah, that's why they're also diversifying. They have all this robo investing, they have all the robo investors and all that. Cal, what's LNS? Sharma Laida. Okay. Awesome. Okay, so you guys can see, right? Look at this. Revenues increasing. Oh my goodness. Do you know that in the past 10 years, its revenue has like doubled? Just look at its financials. And then what's even more incredible, okay? Revenues doubled. But do you guys know? Just take a guess, okay? For the past 10 years, revenues have doubled. Can you take a guess their net income? How many times has it increased by? Wow, Cal, awesome. It's like, okay. Oh, how will TD help Schwab? In market share. Remember just now I was telling you? So it's market reach. And more importantly, through this acquisition, Schwab is actually taking away one of the strongest competitors. They are chopping away one of the strongest competitors. Do you know that? Remember, I shared this before in one of my super early webinars, a few months ago. You don't make foes, you make friends, right? You make friends, you don't make foes. So what are they doing now? If you cannot partner them, I mean, you don't. In this case, you cannot really partner TD Ameritrade because they are hit-on competitors. So what do? Buy them over. You reduce one large competitor. That makes your job so much easier. Okay, and not only that. Okay, Si Yang. This based on this merger. Okay, actually, good question. So based on this merger, right? Schwab has forecasted that TD Ameritrade merger will save them $2 billion of expenses every year. So they're driving down their costs even more. Okay? Yeah. Alfred says 7 times in their income. Morningstar shows their dividends barely growing, their payout ratio is dropping. Yeah, but it's okay. What do you want this for? Do you want this for dividend? Okay, if you want this for dividend, then maybe not for you lah. Yes, that's right. Saying I. Hey, can you guys yeah, Cal, exactly. Buy them over and increase market share, right? Increase your market dominance and remove a competitor. So guys, can you make your guess? Revenues doubled in the past 10 years, but how much has net income increased by? Can you all type it? Type it. Carol, I'm coming to that now. Give me 5 minutes. Okay, let me just show you. Here, look at this. Net income has 8 times, okay? From 454 to 3704, and then now it's like 3269. Can you see 3.3 trillion of net income? All right, and then look at their free cash flow. Do you know that it's so strong? Just look at it. Their free cash flow, out of this 3.3 trillion, 2.6 is free cash flow. Do you know what is free cash flow? Cash is king. After operating your business, after everything that you need to pay off, what is the cash that is left in your hands, right? That is free cash flow. Do you know that out of the 3.3, it's like what, 70% of it, it's free cash. And it just tells us so much about the business model, correct? It tells us so much about the business model. And how much is the acquisition? The acquisition is $26 billion. Initially, I was like thinking, is this a hefty price to pay? But you just look at it, they have $2.6 trillion of free cash flow just this year. It is crazy. Okay, 2.6 trillion. So actually 26 billion is not expensive for them at all. Okay, so you look at their net margins. The net margins have just been growing. From 11%, right? It grew to 20% and then now grow to 30%, And this is really very, very strong. Okay, net margin at 30% is very strong. Now we look at their debt. Their debt is also very healthy at 0.3. Okay, typically we say you invest less than 0.5. Yeah. So now on to valuations, right? Valuations. Like Nokia snake, eat and get bigger. Exactly. Okay. Look at this. Their valuations, right? Just look at price to earnings. Even if we look at price to earnings, do you see that it's at its lowest now in the past 5 years? It has been trading at 30, 18, 17 if we use PE, correct? If we use PE. 5-year average is 23.8, now is 15.8. Price to book, okay, the price to book typically for the past 5 years it's been 3.4, now it's only 2.2. Can you see it, guys? So can you tell me whether it's undervalued looking at this? If you looking at this, okay, what does it tell us? Undervalued type U, fair value type F, overvalued type O. Guys, you look at this and tell me whether it's undervalued or overvalued or fair value. Type U for undervalue, F for fair value, and then O for overvalue. Yes, so we look at PB, correct? Stonehaven, we look at PB. And ROTE actually. But then because they are not a full bank, actually they are not a full bank. Yes, exactly. Okay, exactly. So they are undervalued. It is undervalued. All right, it is undervalued. So undervalued. Yeah, exactly. Right? Guys, so tell me, those of you after I've presented this, those of you who are going to put it on your watch list, type W. Those of you who are going to invest in it, type I. And then those of you who don't like it, type D, like don't like. I just want to see. I just want to see. What are you going to do? What are you going to do? Yes, there's a replay. You can come and watch it, okay? What are you going to do? Those who Wow, awesome. Okay. All the eyes are coming in. Whoa, Wilson says bought already so fast. Hey, okay, I see a lot of eyes. I see a lot of eyes. Guys, I just want to say, once again, we always say this, DYODD. Okay? Everybody, can you please type DYODD? Do your own due diligence. Okay, do your own due diligence. All right. We always say that these are not stock recommendations, these are our personal opinions. So remember to DYODD. Okay, Kelpang. Very good. Very good. Okay. All right. So I just want to give you hope that there are actually good opportunities out of tech. Okay, there are good opportunities out of tech. And then if you have learned something today, type learned. All right, guys, if you have learned something today, help to smash the like button and then type learned. Oh, okay, Jasmine, the merger takes 12 to 18 months. It has already been approved. Okay, it has already been approved. But it will take 12 to 18 months. Typically, merger M&A is like that. It will take time, for both companies to redo its org structure, to merge its operations, its finance, and all the back office. Not just that, right? You have to reshuffle roles. Okay, the front office. You're also shifting, and then you have to. There's a lot of processes to be merged. Okay. Jasmine says earnings next week. All right. So once again, if you have learned, smash the like button and then type learned. And that's all I have for you guys. It's close to 10 p.m. Today is what? Today is Thursday. Today's Thursday. Well, enjoy your Friday and then have a good weekend. Okay. If you guys have any stock ideas to dissect, you can either PM me at my Facebook page. It is here. It's in the ticker that's running now. It's Felicia Fong, the investment and business strategist. Okay, you can also join my Telegram channel because I do polls. How I picked Schwab today, I gave them five options. Okay, 5 options. And then basically I just took the one with the highest poll. So if you have any ideas, you can always PM me. Okay, if not, join my Telegram also to do the polls. Give us some ideas on what you want to dissect. All right. You are very welcome. You are very welcome. Enjoy your evening, guys. Take care. Take care. Bye-bye.